Welcome to The Explainer. Today, we're digging into the Q3 earnings report for the Internet of Things powerhouse, Samsara. That's ticker IoT. The numbers dropped on December 4th, 2025, and believe me, they made some serious waves.
All right, let's jump right into the big numbers. Kicking things off with the top line, Samsara pulled in $416 million in revenue. Now, this wasn't just a squeak-by number. It was a solid beat, clearing Wall Street's consensus by about 4%. And, the story gets even better as you go down the income statement. On the bottom line, their non-GAAP earnings per share hit 15 cents. That absolutely demolished expectations, beating the street by over 25%. That's the kind of operational efficiency investors just get really excited about.
So you've got a beat on revenue, a huge beat on earnings. What did the market do? Well, it loved it. The stock just took off, closing the next day up over 11% on huge volume. We're talking 4 to 5 times the daily average. That's the big money paying attention.
You see, the really crucial point here is that this wasn't just another good quarter. No, this was a statement quarter. The company is even calling it a milestone, and when you look under the hood, it's pretty clear why. This really signals a whole new phase of execution for Samsara.
In this table right here just shows you how strong they were across the board. It wasn't just one thing. We've talked about revenue and EPS, but check out the annual recurring revenue, or ARR, up 29% year over year to almost $1.75 billion. For a subscription business, that's everything. And even more impressive, that non-GAAP operating margin expanded by 9 full percentage points. I mean, this is a company just firing on all cylinders.
But if you had to pick one headline from all of this, this is it. For the very first time, Samsara is GAAP profitable. For a fast-growing tech company, that is a huge rite of passage. It proves the business model is about more than just growth at all costs. It's about building a sustainable, disciplined, and profitable company.
Okay, so let's really dissect this thing. Where did all this strength actually come from? Because a performance this good doesn't just happen by accident, right? It's always driven by some very specific, very powerful levers in the business.
Well, the single biggest driver was some incredible momentum with their large customers. In Q3 alone, Samsara added a record 219 new customers who are spending over $100,000 a year with them. That is a massive number and shows their platform is really clicking with the biggest players out there.
So why does that matter so much? It all comes back to ARR, or annual recurring revenue. Think of it as the predictable, sticky revenue a company can count on year after year. That elite group of big spenders now makes up over $1 billion in ARR for Samsara. That is a huge and growing foundation.
On the earnings call, CEO Sanjit Biswas really nailed it. He called it another strong quarter of durable and efficient growth. And those two words, durable and efficient, that's exactly what the market is looking for right now. Not just fast growth, but sustainable growth that's also getting more and more profitable.
So let's pull back the curtain on those growth levers. What's making this growth so durable? Well, it boils down to two key things: relentless product innovation and a really smart use of artificial intelligence.
First up, product innovation. And it is absolutely paying off. Get this. New products, ones they've launched in just the last year, made up a full 20% of all their new contract value. That tells you their R&D team is cranking out stuff that customers want and are ready to pay for right now.
And we're not talking about minor feature updates here. These are major new platforms. We're talking about things like AI Multicam for next-level video, asset maintenance to keep equipment running, and connected workflows to get rid of paper processes. Each one of these solves a big problem and lets Samsara go deeper into a customer's business.
And second, let's talk about AI. For Samsara, this is not just a buzzword. It's delivering real, tangible results. The company's own data is pretty incredible. Fleets using their AI camera systems saw crash rates drop by up to 73%. Think about that. That's not just saving money on insurance claims. That is literally saving lives.
Okay, so a fantastic quarter, clear growth drivers, but how did the pros on Wall Street really digest all this information after that initial pop in the stock?
This part is actually pretty fascinating. Right after the report came out, the after-hours trading was kind of choppy, pretty muted, but then the big institutional investors had a night to really dig into the numbers and listen to the conference call. And the story completely changed. The stock gapped way up at the open the next morning and finished strong, up over 11%. That delayed reaction tells you the smart money saw something really special in this report.
The Wall Street analysts, they quickly followed suit. We saw big firms like RBC and Piper Sandler bumping up their price targets, all pointing to that durable growth and better profitability. The consensus was crystal clear. Samsara is executing at an extremely high level. The one little catch you kept hearing, the stock's valuation is rich, so it has to keep delivering these kinds of results to justify it.
And that brings us to our final section, the next call. Looking at all this, the big question on every investor's mind is, where does the stock go from here?
Now this is where things get a little tricky. Management's guidance for the next quarter was good. It actually beat expectations again. But, and for a growth stock, this is a huge but, it does imply a bit of a slowdown. So what does that actually mean for the stock?
You can see it clear as day right here. That 29% year-over-year revenue growth they just put up in Q3, well, they're forecasting that to slow to around 22% in Q4. That deceleration is a critical data point that every single growth investor is watching like a hawk.
So, to make our call, we use a simple framework. First, we look at the outlook. Okay, top-line growth is slowing down a bit, but profitability is ramping up way faster than anyone thought. Second, what are the catalysts? Can new AI products and more huge customer wins help them beat that guide? And third, we put it all together for our rating, balancing that awesome momentum against the stock's premium price tag.
So, after weighing all those factors, our call on Samsara is an outperform rating. And here's exactly why. The execution is just flawless. Management is beautifully navigating that tricky shift from pure growth to efficient, profitable growth. That large customer engine is firing on all cylinders, building a really durable foundation for the future. The AI product cycle, contributing 20% of new business already, is a huge leading indicator. And finally, hitting GAAP profitability way ahead of schedule just de-risks the whole story and opens up the stock to a whole new class of investors.
And as always, just a reminder that this content is for informational purposes only. This is not financial advice.